Good afternoon, everyone. We are live for Shifting Paradigms, MyTrade's mid-year market outlook. Ako po si Cadis. I'm Abacus Securities online business head, and I'm happy to welcome you all in today's event.
Called shifting paradigm is very important to for everyone to try and hear the point of view of research, especially Nikki's handling the presentation and for Lauren, so that then during times like this you don't get to panic. No, I think in terms of personal experiences and being a bank trader as well for many years, the first thing I think that matters when you start to worry about the market changing, the economy changing, concerns about inflation, and then recession. Are we going to have inflation? Are we going to have recession? And will the whole economy tank? Some people get a little bit overdone. Um, Really, one should just be able to. First thing to do is to just sit back and look at the market and say, is it going to be that bad? Is it going to be not so bad? And reading the research paper short takes is a very good tool because then they explain to you in terms of economics how a professional look at the whole market. I think the things you need to always think through the industries that I invest in. Uh, how exposed is it to the problems of exchange? No,
finding its footing right now at current levels, especially with some help from other markets which have started to rally. If we follow suit, then we should be seeing a rally towards 6,600 or most successful investors. We're also perplexed with this kind of market. Like for this one, for example, Howard Marks, he said, these conditions are not reminiscent of any that I've lived through. So this reflects sentiment of many other people as well, other investors as well.
Now, the important thing about this chart, as you can see, is that the forward EPS for the PSEi is still well below what it was prior to the pandemic, whereas both the MSCI Emerging Markets Index and the EPS for the MSCI Asia ex Japan are both higher, and in the case of the latter, it's much higher. So again, this is one reason why foreigners are likely to stay away from the local market for some time, because the earnings of other markets have improved and caught up to pre-pandemic levels much faster compared to the Philippines. And only for the Philippines, we're only looking at a full recovery for earnings by next year. Next slide. Now on valuations, for those who attended the briefing at the start of the year, what we said is that the valuation for the Philippines for the Philippine market has been trending lower, and we said that it's probably going to go down to 14 times forward PE over time. At the very least, foreign selling also has to pause. We don't actually need foreign investors to return. There was a time when foreign selling stopped. No, I think it was for about 6 to 8 months in the from middle of last year. No? And we'd like to emphasize that clients should stay invested. I think this graphic is important now because, and this applies to investing as well as sports or any other field. No, when we look at others in the stock market, for example, um, or other traders, we only see um, the gains that they're posting on social media or whatever. But we don't see the all the hard work that they put into their trades. We don't see all the hard work that they do studying companies. Whether or not we should accumulate CNPF at current levels, I think our view is that CNPF is a good company, and the fact is that the price of tin, which is essential to their packaging, which is cans, no, has dropped dramatically over the past few weeks. I think tin is already lower today compared to at the start of the year. So their packaging costs are going to come down over the next few quarters. So my answer would be yes. It's advisable to accumulate CNPF at current levels.
Okay, thanks, Sir Nicky. How about for Sir Lawrence? If we can accumulate CNPF at current levels, can you recommend a good entry point for CNPF?
Yes, there's support at around 1980 to 20.1. That's the two recent lows. So I think around 20 we can start considering CNPF for buying. For me or Nikki? Nikki, go ahead.
For either, sir. I think you'll both have valuable insight on
Yeah, I
this.
think it's more from a trader's point of view, no. But for me, if you believe in the company, if the basis for buying it in the first place was fundamentally driven, and if you think that the basis is still correct, then for me, I wouldn't cut.
Okay, and then let's hear Sir Lawrence. What do you have to say, sir?
Well, buying on dip is quite tricky because if you buy on dip, you have to know where are the support levels, and if it breaks one of those support levels, then you would have to decide whether to cut loss now and minimize your losses, hope to buy back lower. But I'll give you the textbook recommendation based on William O'Neill. He recommends cutting losses at 7%. That I think we mentioned that in one previous session that we had. So to avoid getting into those buying on dip and to avoid getting into those situations, what if you look at the chart, it start to dip, then you look for reversal signals. You buy only when you see those reversal signals. Yan. That's one way to look at it. There's really no right or wrong. It depends on one's trading personality.
Yes, and the strategy that they're applying currently for that specific stock.